All right, great people. It's your boy MineDialogue back again on the scene. A little bit serene, but always relatively keen to all the charting schemes. So, I'm gonna hit you with a little super early morning, but really late night for me. It's almost 3 a.m. right now. I got a late workout in. But I might trade SPY in the live session tomorrow, depending on if I'm able to do it. I pick my daughters up. If I'm able to get back here on time or be able to get in the trade on my phone, we'll see. I'm not going to force it. But I just want to show you relatively quickly my analysis on SPY. This is more so for right now or for tomorrow and the next couple days. I'm on the 3 hour time frame right now. I didn't really look at like the bigger picture. We're definitely on the up and up. And so we're going to be doing a couple things to see where we might do some type of reversal or, where we're looking to get some reprieve or refueling to continue up, or where we might hit a top to reverse. So I'm on the 3 hour time frame right now. I got my levels labeled out. Some very key things that I do to be able to get these levels. If you want to get these levels, you can reach out to my email and we can set up a session. I do not give these out for free because there's a very particular way that I go about getting them, in addition to these key green areas that you see. But outside of that, we'll do some other analysis based strategies and things like that to still be able to, get you what you need. Remember to like, comment, subscribe if you want to continue getting some of these gems and like to see what my bias is in the market. So I got the levels. We'll go into that. One of my indicators are on right now that I like to use. I've been using for a really long time. It's created by, I'm not sure who it was necessarily created by, but it was recommended by this guy that I used to follow and pay attention to inside of the Wealth Squad group. He's no longer with them. His name is Ray Stratit. I hope I'm pronouncing it right, but it's like Ray Stratachia or Stratachia, something along those lines. Definitely knew his stuff, knew about his analysis. He was one of the admins, I believe, or just one of the researchers or people who helped with analyzing charts and different tickers to help folks figure out their trading or help with their trading strategy and things like that. I really like the Wealth Squad group, some intelligent folks in there. A lot of people know what they're doing in there. Some really smart folks. So it's just good to see the different types of strategies folks use. Everybody kind of came to the same conclusion for the most part, unless the market did some wild stuff or news came out that mess, people up. But that's part of the game, right? You're not always going to be on the right side. You just have to plan to mitigate your risk if you do end up on the wrong side. But so this particular indicator gives you an upper and lower range in terms of where price will probably gravitate towards, right? So it has a lower range from 622.23 to 622. And the thing is, this indicator also updates in real time, right? So by morning, when the market opens, it may shift and go a little higher, go a little lower, depending on price action in the pre-market and all that stuff. But right now, I kind of did my assessment based on, so the reason I even got these levels is I have my 3 hour measurement start point. I got it from the bottom of a bearish fair value gap from the 7th of July, so over a week ago. And the reason I chose that is it was pretty close to the lower ADR range, and I knew once I got my discount level, as I anticipated, would strike directly through the lower ADR range. So I know it's a very key and solid level that I based my starting point from. And you can see that when we came over here, and remember this is on the 3-hour, when we came over here, they manipulated below this area by closing below this 3-hour twice, pushing up, and then doing a nasty sweep to go get, let's see if we broke. So down here, it did a nasty sweep, but I don't think it broke the low of like the most important low prior. So you can see here, when they came down and did this nasty sweep, they took out all of this right here, but they didn't breach this low right here. So that's an indication that we're going to go back up. For them to do a sweep, come so close to this and not take it out, look at this insane reaction and reversal. You got what's that, from 618 and change in one candle, or in 3 hours, they reversed and went up. They basically cleared $5. That's amazing. That's a beautiful move. Look at that. And then look what happened as a result after that, right? And you can see here, once we got a close above, I would say, the starting point and even the discount level, you can enter, but it all depends. Some of this you may have not been able to catch in the real market, because the chart that I have up consists of both pre-market, aftermarket, and live market trading. But we are going to go down on the lower time frame on SPY. So I have my 50% range here. So I measured from the starting point, the 3-hour measurement start, all the way up here to this 3-hour 2 level, that I did a measurement to forecast out into the future. I'm going to take the indicator off for a moment, so it could be slightly a little bit cleaner. But you can see here, there's key things happening both in the green spatial areas and in regards to the levels that I created. So, you know, you wouldn't look to get an entry model on the 3-hour. That time frame is too big. By the time you enter on that, you're going to miss a good chunk of the move. So we're going to go down into the lower time frame and look when could we have caught the entry for this move to go back up, right? But you can see here, look, see the green area? Look at the support you're getting. The bodies do not breach below the bottom or the base of the green area. Once it comes up, you got a doji-like candle again, another spin top candle, where the volume of trading, or the significant portion of trading, resides in the midpoint of the entire range of the candle. And then look again, they come up, they wick into the 50%, they continue up. Now we have closed above the discount level I have here, and I'm potentially expecting them to go and breach this level 2, closed above it, and I feel like a reversal is coming. Because the reason I feel like that is because we just cleared important highs here, right? We just cleared important highs here. We just closed above the discount level that I created. And then we're about to attack. I'm going to put a price alert there. So on trading, where you just got to click on the plus sign and add alert. You're not going to be able to see it because I have the black horizontal line, but it's inside of there. So I'm expecting there to be a closure above this level 2 here, which is 629.14. And then for the high, once they closed above it, to get swept, right? They'll go higher. That could be your entry. And then they'll, if they're going to reverse and come down to get some fuel, they're going to reverse and, come down and break all those things. So real quick, I'm going to turn the indicator on, I'm watching this. So the indicator shows you the open. That's the key area I'm going to be watching down at 624.4, primarily because it was a support area. What I've noticed over time studying this is when you're getting support off of open, that's a good opportunity to enter to go up. And you can see what happened as a result after that. Conversely, when you're rejecting or wicking up into open, you're most likely going to come down. So let me turn this thing back off. Let's go on the lower time frame. Well, before that, let's see if we can create some trend lines to see if we can get an idea of what might be coming our way. So we're going to do an array trend line. This is too thick. We're going to make this less thick. We're going to do that. So we got this array trend line here, and let's. All right, cool. All right, so we got this rate trend line that hit. Let me see here. We got this rate trend line that I got the first point here at this swing high here back in the 3rd of July. And then we got the next swing high here for our second reference point on the 15th of July. So I created the array off of these 2 points here, right? And then we can see that, and remember, this is on the 3-hour time frame, and we can see that we just hit up into that trend line. So I'm pretty confident, like I would bet that by the time pre-market opens in a little over an hour at 4 a.m., there's a high probability we're going to reject and start coming back down. I just hope they don't take most of the move going back down. But if they do, we'll be looking for a place to potentially enter to go back up. So we got a trend line up top. Let's see if we can get one at the bottom. All right. So if we're going to draw one at the bottom, I like this right here because they stick out like sore thumbs. Boom. And these reference points, this is from the 27th of June, and this is from the 16th of July, right? So it looks like we hit the top before getting the second reference point at the bottom based on that. And so this, in all honesty, can be like considered like a channel, right? So we're hitting the channel for the 3rd time. I'm expecting some type of rejection here. Now they can go above it in real time on the 3-hour. You can, within the 3 hours, they can go a decent way above it, go above that level 2. And then before the 3-hour ends, they'll sell it down hard, leaving a nasty wick through the trend line in that level 2 and start reversing to come back down, right? So that's what I'm watching. I'm watching this open area, which is right here. Now, we can measure, let's measure from this swing low down here, which is a beautiful sore thumb looking swing low, all the way up. I'm going to go to the level 2, and we can see that the 62%, the last level that should be holding us down, actually is right above our discount level. So that's a lot of range for the day. Let me see how much they've been moving. So the other reason I like this indicator is it shows you the ATR, or the average true range, right? Which is $5.45. And then it shows the daily true range of what we actually move for the day, which is $4.22. So even if we go on the higher side, $5 to $6, we're up at 528.75. It's pretty realistic for us to come down to the discount level of 622 because that's the $5-6 range that it can move. So it wouldn't be far fetched if they came down here to the lower ADR discount level area. So I really like this indicator for that. Another indicator I use is the strat. I don't use it as much, but I do like to see what particular. So I don't fully understand this the whole way, but I understand it enough to like for me to understand it. I can show you some things about it, but the strat is a particular kind of candle price action strategy that looks at the way in which candles move to determine a potential like continuation reversal that's going to be taking place. Now right here down at the bottom right corner it says the current actionable setup, and it basically aligns with what we were thinking, is that we're probably going to reverse because it has a reversal. It has a 1-2-2 reversal to the downside, and a 1-2-2. Let's see here. They have this one in yellow. Let's change this one because we can't even see it. Let's change it to black. You can never go wrong with black. All right. 1-2-2 means, let's go a little closer. Remember, like, subscribe, comment. You can even donate to the Cash App, MineDialogue. That's money sign, MineDialogue, or hit me up via email at MineDialogue.business@gmail.com. So this 1-2-2 reversal potential setup is saying this spin top candle here that we've seen multiple times now is a 1. And a 1 means it's an inside candle because the entire range of this candle trades inside of the range of the previous candle. So the highest point does not go higher than the previous candle's high up here, and the lowest point definitely doesn't go lower than the previous candle's low, right? So it's a 1. 1 are inside candles. Then you have this 2 because it popped up above the 1, right? 2 are directional candles, right? So 2 can be a 2 up or a 2 down. So what they're saying is we have a 1, 2, and the next 2 candle that's anticipated or expected should be a 2 down candle, which means we should reverse, and that's in alignment with what we're anticipating with our trend line here and this level 2. So we're going to be looking for that. So I really like this particular indicator as well, and it also shows you the average true range, which is 545 on here. All right, so that's dope. And it also shows you other things as well, like it'll have certain things like specific type of candles like shooters and hammers. Like it has this hammer here because this is a hammer candle. We'll talk about that later, and shooters and all types of stuff. Let me take it off. We're going to go down to, let's go down to the 5 minute. We're going to go down to the 5 minute time frame, stretch this out a little bit so we can see it properly. All right, we're on a 5 minute now. Another indicator that I have here that I like to use sometimes is, let's see, I don't want that 50-day. I have a Lux Algo divergence, but I don't really use that as much anymore, to be honest. I like this wedge and flag finder by TrendScope, right? If you have a difficult time like identifying wedges and like channels and things like that, it'll help you kind of see some stuff. So you can see it has a bunch of stuff here. Let me see if any flags formed. Let's see. No real flags right now, at least not on the 5 minutes, just a bunch of different wedges and stuff. Let me see if there's something else that I like. I had a 5-day moving average. I'll put the 20-day on there. That's pretty much for me. Oh, there's a volume profiled fixed range one. You can use that as well. Kind of shows where the key level trading is taking place, like where the big orders are coming in, and you can see it has this point of POC. I don't know if that stands for like point of, I forgot what they said, what that meant. But this POC, essentially point of interest, at 628.12, and there was a lot of volume there, and it looks like there's more selling than buying. So they're gearing up to probably reverse. Again, things are pretty aligning. This is the 20-day moving average yellow line. I don't know why they have that yellow. You can barely see it. Let's make that black as well. But I'm going to take those off. I don't really need to use those right now. And I don't use them as much. It helps me when I'm trying to analyze and, do charting, and I want to see if certain things are aligning with my premise. I'll use it that way. So you got this 5-minute time frame that we're on right now. You see a bunch of candles. Every candle you see represents 5 minutes of trading. So it looks like we tagged into that trend line here, and it looks like they currently closed above it 2 different times. So we're just going to be watching this. We can see if we can identify any other channels and trends and things like that. But look here, look how they manipulated 2 different times below this 50% before taking off. That's a beautiful move right there. Beautiful move. So let's see if we can get, I remember I created a channel from before. Let's see what we can identify here. Let's see. See if there's any particular channel that we could identify that's worthwhile. I mean, I see a couple things already. I think from earlier when I first jumped on the SPY charts, I told you all about this particular channel right here. Let's see where we can draw from. All right, you got this. Let's make this less thick. Got that channel. We got the bottom. Alright, you got this bottom channel. Let's see if I can straighten this out. Let's get it there. Better. So you can see we got into this channel and we're ping-ponging going up, right? So this is something that can help you stay in the trade if you're in it, as long as they don't close below. So like, for example, if you're viewing this in real time, right? This yellow looking area, that's all pre-market trading. So you couldn't even, so they started the channel in pre-market, right? Ping. So once market open, because this is right at market open, you could have got your entry here, right? And it dips down into this green area. Once it goes back up and closes above, that's pretty strong confirmation for an entry there. Or, you could have identified this bearish this is a bearish fair value gap and volume imbalance. We're going to change the color of this. All right, so let's make it a little bit bigger. So actually, it might just be a volume imbalance in all honesty, not a fair value gap. So let's see. This is kind of high too. We want to catch this at a lower point. So this is where it came to, right? Hold on. This is too low as well. Trying to see where's a good point we can catch it of where an inefficiency showed up. Let's see. Oh, I caught it right here. Wow. But I'm looking for an inefficiency. So let's see if we get something on the 4 minute. Yes, we do. Let me see. Let me see where we can catch it perfectly. All right, I see where. So this volume imbalance, it's actually a bullish volume imbalance on the 4 minute. Right here, I'm going to show you where it shows up at. Right here. And we draw a volume imbalance similar to how we do a bullish or bearish fair value gap. This gap area, let me go a little bit closer. See this, even though it has wicks in here, but this gap area between this candle right next to each other, that'd be considered. And it's going from down to up, so it'd be a bullish volume imbalance. Because price closed down here, but then it popped up and opened up here, rebalance. That's that wick coming down. Rebalance the. Look at this. Remember we talked about the formation of a candle. Let me take this circle out. So look what happened. This red candle, we close. Well, first of all, it opened at the top for the body. They bought it up all the way up to this high, sold it all the way down to this low, and then bought it up to the close here. Then the next 4 minutes, the reason they call it a volume imbalance is because you can see it. There's like a gap in volume. It's an inefficiency. So they were most likely going so quick from one 4 minute to the next that they left orders behind. And look what happened. They gapped up, opened right here at the bottom base of the body of this green candle. Then they sold it down, right? That's your manipulation. They rebalanced this area, right? And then they went up to this high. So they sold it down, sell, rebalanced. They rebalanced exactly where this candle opened, right? Rebalanced it, bought it all the way up to the high, and then sold it down to the close. Boom, right there. Then you got this red candle that cleared all of that stuff, right? It's a whole sequence going on there, but my goal isn't to highlight that right now. Let's make this a different color so we can kind of clearly see what happened. So check this out. I'm gonna make this black. The border of this black so we can be able to see this clearly. All right, so look what happens here. Pre-market, right? Now remember, again, we talked about the channel. They entered inside of the channel. So it's kind of interesting because we can see the channel, but in real time, we wouldn't even be able to tell it was a channel until, like, technically, you can start drawing this channel. I'm gonna show you where. man, time up already. 3 minutes. All right. So right here would be your first reference point. Make this a little bigger. And then here would be your next reference point for the top channel. And then the bottom channel, you can start it here, right? Those were swing highs, even though some of them may be subtle. And then swing low here. You can do it here. Those would be your first reference points. So then it started operating this channel. So it made this low, and then at open, look what happened. Hit the bottom of the channel. You can get your entry there because this already went into here perfectly. Tap that volume imbalance we identified, and look what happened after. Just started creeping inside of the channel. And then it came over. We have some consolidation. All right. Let's get it to where the lowest body is. We have consolidation. So I'll give you a follow-up soon. We're about to end this video. About a minute and 40 seconds. So we'll see what they end up doing with this area. They might use it as support. But if they go up here, now there's also the chance that they can go all the way up here to hit the bottom of this channel still. They can go that high. And on the 3 hour, it'll look more convincing, right? So like, let's see how it looks on the 3 hour. The 3 hour, it's not even that much space. So they can literally go there and then sell it down, and things will still pan out the way we need it to do. So what I'm looking for is some type of close above the 2 for an entry to go down. If I can't catch that, I'm going to look for an entry down bottom to go back up. But I'll give you an update. I appreciate y'all. I hope y'all have a great day. And y'all keep going. Don't give up. Love.